Dambisa Moyo is a keynote speaker at the Mining Indaba now underway in South Africa. She believes that China is way out in front in the race for the world's resources. Today she addressed misconceptions over China's appetite for commodities as the world's second largest economy continued its infrastructure expansion drive, which has led to a commodity supercycle over the past decade. She's on record saying there's a lot of misunderstanding over China's growing demand for commodities. She now joins us live from our Cape Town studios. Professor Moyo, a big honor for us to have you here on Beyond Markets. Thank you so much for agreeing to come on to the program. Now, of course, you are not a China skeptic. You take a very different view to the mainstream view that we often hear coming from analysts looking at the growth of the world's second largest economy and, of course, also its relationship with the continent. What was your key message to the Mining Indaba today?
So the key message is that China is not the bad guy. I think that we have and face significant changes on three fronts around mining specifically, but commodities in general. The first point is around price increases and more volatility that I expect we will see around many of the commodity markets. If you look at commodity volatility in most markets, agriculture products, mining and energy, it has significantly increased in the aftermath of the financial crisis. The second key point is around the risks of increased conflict. The United States government put out a report last year citing worry and concern about increasing conflict, particularly around water. But if you look around the world, there are at least 20 conflicts that since 1990 have their origins in commodity scarcity. And then the final point is around this risk of increased resource nationalization, which I tried to address. This is in the more extreme forms, government expropriation, sort of the ones we've seen in Argentina, but also higher taxation, which we've seen in Australia, and much more government intervention, as we're seeing a lot across the world, from Mongolia to Bolivia and elsewhere. And really what I was hoping to get across was that this is not the right approach for long-term sustainable investment, an approach which is aggressive and which is very much about government acquiring assets in a very aggressive way. Ultimately, there are pressures in the industry, and I think it's really essential that private sector sit down with government and have a proper open conversation about really what is possible given the volatility in the market.
Now, this conversation that is needed, that you speak to, involving the private sector and governments, let's contextualize it to the South African conversation that is going on. We've seen a lot of tempers rising against the backdrop of threats of nationalisation. Minister making it very clear in her opening address that it's off the table, but of course the uncertainty arises out of possible taxes relating to resource rents, and of course also the whole question of how to penalise those that don't come to the beneficiation table as Africa tries to move beyond extractive economies. What is essential to get trust between these two players, because we often find that they are not able to hear each other through the noise?
Yeah, and I think you've just basically made the right point. There's far too much noise going on. I think we need to look at the experiences of other countries, particularly countries in South America that have tended to embark explicitly, but sometimes just implicitly, on a campaign for national resource nationalization. What are the consequences of this type of thing? Well, first of all, we have seen and we know for a fact that if governments take on a sort of tight grip around either higher taxation, more aggressive taxation, I should say, or even expropriation, it almost invariably creates so much uncertainty that the amount, in terms of quantum of investment, will decline. But there's a much more insidious problem that emerges from this, which is the idea that you find that there'll be less debt financing opportunities, and basically all the investment that would occur would have to occur by equity financing, which is much more expensive and is not an ideal situation. The net effect of these two problems, or these two effects, is that you end up with higher commodity prices in the longer term and much more volatility, which is neither desirable from a public perspective, from public policy perspective, the idea from government, but also it's not ideal from the perspective of private companies. There are issues, of course, that we need to deal with around both wage increases, concerns around pensions and entitlements, but I think we need to be realistic about what it is the private sector can and cannot deliver, particularly in these very, very challenging times in the global economy.
Now, of course, the question of sustainability is a big issue, both in terms of commodities, but also the way in which mining companies conduct their businesses in countries that have large social issues and pressures to deal with. You talk about, China going on a shopping spree, if I'm to quote you correctly, from an article in The Guardian, where you speak about, the way in which China has gone out to deal with its burgeoning middle class and what it requires. Talk to us about how sustainability is impacting on this aggressive shopping spree, to use your words, when we look at China in relation to, its needs in the mineral sector.
So it's absolutely at the heart of the decision-making process. I'm not saying it's always been the case, and you could argue even for Western companies, it has not always been the case that sustainability issues, whether it's environment, labor laws, and so on, were at the heart of the sort of utility function of companies. But it's absolutely at the center of whether the campaign is coming from Western companies or from places like China, which is largely delivered through state-owned enterprises. There is no way a campaign for resources can be successful in the environment in which we live today without having a clear and direct and deliberate approach to sustainability issues, be they environmental concerns, wages, concerns around labor. They all have to be at the heart of delivering and being able to execute in an effective way, both for private sector but also with the government's blessings.
A final quick question. What is the outlook for how African governments should be managing resources that are so plentiful but that often does not go to its people, instead going to elites?
So this is at the center of whether or not the China era, shall we speak, in Africa is going to be successful or not. In future, when we look back at this period of time, we'll be able to know which governments were actually sensible and smart about understanding what exactly is going on. The Chinese interest in Africa is largely, but not exclusively, about commodities. And we know they've invested in banking, in telecommunication, and other sectors. But we need to remember that they're investing in resources that are scarce, finite, and depleting. It is absolutely essential for African governments and policymakers to understand that this is not an open-ended commitment.